Hello everyone, I'd like to welcome you to episode 3 of Ask Mortgage Mike, where we take questions that people have regarding the mortgage industry, and I try to provide some insight on that from a mortgage professional. Today's topic, what I'm going to talk about is the different loan programs and the different down payment types for some of those loans. So the first thing that we're going to start off with a couple of 100% different down payments. So 100% financing, no down payment required at all. One of those is going to be a VA loan or a veteran's loan. So obviously for that, you'd have to be eligible for a VA loan, which typically comes by serving in the armed forces. You do 100% financing, no down payment. Anything below 417 does not require a down payment. Once you get above 417 for $417,000 or higher loan amounts, you're going to be required to put down 25% of the amount above $417,000. So on a $517,000 home, $100,000 difference, you'd be required to put down $25,000 to be eligible for a VA loan and use that financing. The other is a USDA loan. USDA, United States Department of Agriculture, you're going to be eligible for this if the property is eligible. So only certain areas have USDA eligible homes. Of those homes, once you find one in your area, if you live in an area that has USDA eligible properties, you then have to meet income and credit restrictions also. You can find this out by going to usda.gov and do some research there on your eligibility for the mortgages there. The next loan program is one that's recently come out. It's a 3% down program. It's a conventional product. It's made for first-time home buyers. A first-time home buyer is anyone that has not owned or purchased real estate in the last 3 years. You cannot have even been on title in the last 3 years. So if your husband bought a home and you lived there, or your wife bought a home and you lived there and you were on title, 3 years for your name has to be off of title. So no real estate ownership in the last 3 years, and you can qualify with 3% down. This also has a reduced mortgage insurance, which from episode 2 you understand the impact that mortgage insurance plays on your mortgage. The next option is an FHA loan. Now, FHA is going to require 3.5% down, and different counties have different loan limits for FHA. Los Angeles County has a much higher purchase price or loan limit for FHA than Charlotte, North Carolina. So you're going to have to look at those and find out which county you're in and buying in, and then you can find out the FHA loan limits. FHA will require 3.5% down of the purchase prices of the home as long as it's underneath the county loan limit for your area. The next option that you have is then just the conventional products that we mentioned on last week on the down payment, really going to be 5% from there. You can get down payment assistance if that's available in your area. So in Charlotte, for instance, you can buy a home with 3% down. You can get a down payment assistance for the full 3%. Generally on down payment assistance, which will be another episode, you're going to be required to meet income and credit requirements for that. So again, this was episode 3. If you like the channel, please subscribe and look forward to seeing everyone next week. Have a great day.